So in this video I'll be showing you, and this will be the last for this series, exactly how you can combine the MACD indicator and the Bollinger Band indicator. Remember, we have established that whenever the MACD histogram line is above the zero level, which is the equilibrium level, we are in an uptrend. And when it is below it, we are in a downtrend. So look at the zero level we are referring to. Anytime this particular zone, when you see MACD above it, we are in an uptrend. And when you see it below it, we are in a downtrend. Or it shows us the momentum. This means that this shows the strength of a buyer. And when it is down, it shows the strength of the seller. So that is the basic about it. Now, if you must buy, the MACD histogram line must trend above the zero level. And if you must sell, the MACD histogram line must trend below the zero level. So if you look at this carefully, what we are having here, you realize that more of this MACD histogram has been trending above less than it has been trading below. So this sells to you an idea that price is in an uptrend. And if you see the volume of how it moves to the upside compared to the downside, it shows you the momentum that is present in the market. So, and also you will notice that the Bollinger Band is shrinking. You can see it here. Both the upper Bollinger Band, middle Bollinger, and lower Bollinger Band, they are shrinking. But when you see that in this scenario, see how the upper Bollinger Band expands to the upside. This shows the presence of momentum. So, how do we then make our trade entry? Once you have identified the trend or the momentum in a particular direction, be it bullish or bearish, you will now need to be patient and wait for this to shrink. Always wait for the Bollinger Band to shrink, have a little sense of compression. So once it shrinks, it shows that it is consolidating. And since you have identified the trend, all you need to do is to wait for a bullish confirmation. Like in this scenario, we have this bearish candle. So what do we need? We need a bullish engulfing candle. Price closes above the middle Bollinger Band, and that becomes your entry. And you can see that the rest is history. This is repetitive. This is very, very simple, and it is easy to do. In this case, it pulled back, though it did not shrink obviously, but when it went above the middle Bollinger Band, give you a bullish engulfing. Always wait for a bearish candle and then wait for what will happen after that bearish candle. Then you see how it push up all the way to the upside. So this is working. Look at here again. You see how it shrink, and then after that shrink, look at this pin bar. Do you see that? That's the pin bar entry confirmation for your buy entry, and you would have been in that trade. So even if it pull back or it shrink and it pull to the upside, be patient, let it come back. Okay, let it always come back, and then the coming back will give you a bearish candle. After that, you will now get a bullish engulfing candle or a bullish pin bar that will pull you to the upside. In this scenario too, you were patient enough for it to pull back. Then you have this bullish engulfing candle, and that becomes your push to the upside. So you can see how effective, you can see how simple this works. Now here we have been experiencing a downtrend in this scenario. So look at what happened. It's pulled back. We have this, and then we have this engulfing. You would have sold. Again, look at what happened. When it pulled back here, be patient, let it close below the middle Bollinger Band. We have this confirmation. Look at this pin bar. and then you sell to the downside. And then afterward, when this went back, you can see that it never gave you that confirmation again. Then it went to the upside, and when you look carefully, momentum has changed here. It has crossed above the zero. So once this happens, you don't need to look for any selling opportunity, because your degree of selling opportunity, and then in this scenario, price has already gone up. So when it came down, you already know, look at what is happening here. And then if you look carefully, even if you get this, let's assume you still went ahead to sell. So you sold here, eventually it plays out a little and it still take you out. So it's not a bad idea that 4 plays out and 1 take you out. So I believe this is clear enough. So we'll be moving to the next step in the subsequent video. Thank you, and see you in the subsequent video.